Hello and welcome to India Today SoSouth. I'm Gautam Shankar. Now, the middle class, the tax-paying population of India, keeps staring at the face of the government every time the budget day approaches. It is this neglected segment that pays both income tax for earnings and GST for spending. It is this 2% of the entire population of India that is contributing massively to the country's infrastructure growth and also the welfare politics. So, what did Union Finance Minister Nirmala Sitharaman present for the middle class on the tax front in her seventh consecutive budget amid expectations for relief? Now, on your screen, you can see the tax regime that has been proposed now. So, basically, let me just take you through the highlights. Up to 3 lakh, there is no tax, nil. 3 to 7 lakh, it is 5%. 7 to 10 lakh, 10%. 10 to 12 lakh, the tax rate is 15%, 12 to 15, 20%, and 15 lakh income and above will be taxed at 30%. Now, specifically, the changes have been made in these three slab categories. Over 3 to 6 lakh categories at 5% has now become 3 to 7 lakh. 6 to 9 lakh at 10% has now become 7 to 10 lakh, and 9 to 12 lakh at 15% has become 10 to 12 lakh. So, Sitharaman has also announced relief for taxpayers who have opted mainly for the new tax regime, hiking the standard deduction from 50,000 to 75,000. Now, to understand and make sense of it all, I'm now joined in by Mr. Padam Khincha, a direct tax expert and CA, who will break it down for us. Thank you for joining us on India Today SoSouth, Padam Khincha, sir. So, what do you make of your initial reactions of the Union Budget 2024?
There are a couple of ways in understanding the budget. That depends on what angle you're looking at. Because there are certain changes in the regimes of taxation. One is we're looking at the rates of tax that is now proposed and that is displayed on the screen. I'm so concerned with that immediately. I'm also concerned with my standard deduction. Is there any benefit I'm getting out of that? That's one way of looking at things. On my normal basic income, I also look at the way I'm going to be taxed on certain savings I've made, which I've invested in the stock markets. How am I going to be, therefore, looking at the taxation of the stock market income? I've also invested in a property that I may try and sell tomorrow. So how do I look at the capital gains on the sale of the property that I'm going to be offering for tax tomorrow? So it's a mix of the various angles in which a person is looking at it. And therefore, on a very standalone basis, possibly, these slab rates will help you. But how much do they help you is very interesting. How much do they help you? They only, as you rightly pointed out, they've only moved the slab from 3 lakhs to 6 lakhs. That has become 3 to 7. Reasonably, as a result of that shift in by 1 lakh, even that 6 to 9 lakhs has become 7 to 10 lakhs. Beyond that, just the same. So ultimately, you have a tax savings of only 10,000 rupees under the new scheme as proposed on the screen. You have to add to that 25,000 rupees extra standard deduction you're going to get. And the FM believes everybody is going to be the 30% slab. Therefore, she is qualifying to say you will save 7,500 rupees on that. And therefore, she makes a bold statement in the budget that the savings you're going to get by virtue of adopting the new rates are going to be 17,500, 10,000 from the slabs here, and 7,500 from the increase in the standard deduction, which tantamount to 70,500, which will be the deduction available to you, or which will be the reduced tax payable by you under the new regime. So that's the way she is making it out to say, effectively, otherwise, you will be only saving by virtue of the adoption of these slabs, by virtue what is displayed on the screen. You'll be saving only 10,000, regardless of the shift in your income, whether it's 15 lakhs, 20 lakhs, 25 lakhs, 30 lakhs, 50 lakhs. You will be saving only 10,000 consistently in terms of your taxes.
All right. Padam, just what I also want to understand is it more beneficial for taxpayers now, especially those who are with the old regime, to migrate to the new tax regime? Because if you talk about deductions and exemptions, if you have significant deductions under the old regime, should you continue to stick with it?
Therefore, if you start making an analysis of what happens under the old regime, for example, if your income is 20 lakhs under the old regime, and you don't have any deduction whatsoever, then you're liable to pay about 4,25,000 rupees of tax. Whereas you adopt a new scheme that is coming about, you'll pay tax at 2,90,000. Therefore, on a very standard comparison, you will find that the tax under the new regime is far lower. But then that The old regime has the benefit for you to claim 80C benefit, you can claim 80G benefit, especially 80G benefit, people who are rich, who contribute significantly towards charitable trust and would like to therefore have 80G, will have always the old scheme being beneficial to them, because the saving they make by virtue of 80G is going to be substantially larger as claimed as compared to the new regime itself. So it depends upon what slab you fall under. It depends on what deductions you are claiming. Especially 80G deduction if you're claiming, old scheme is definitely going to be better. At the lower rates, 80C deduction towards LIC and PPF will make a difference somewhere.
One moment, Padam Khincha, sorry to
Yeah.
interrupt there. Now salaried persons can use ATC exemptions to reduce their taxable income by about 1.5 lakh in a fiscal year. So,
Correct.
would you have anticipated a revision or hike in the Section ATC limit? Because it has remained unchanged, since 2014, if I have got it right. And would it would also hit the taxpayers in
The
managing the inflation and encourage them to do more savings. So, what do you make of that?
The finance minister wants that everybody necessarily moves to the new regime. She did make a statement that 58% of the corporate taxpayers and about 66% of the individual taxpayers, non-corporate taxpayers, have filed returns under the new regime. And therefore, her focus is to ensure that people necessarily move to the new regime. To that extent, she has to make the old regime lesser incentivized. Therefore, she is saying, I'm not going to increase any quantum of deductions available to you under ATC or any other sections concerned. We would like you to move mandatorily, technically, not necessarily happening by law, but by virtue of the conduct by tweaking only one rate, not the other rate. She is therefore compelling people to move to the new regime only. Under the ATC regime, therefore, you are entitled to some benefits. You are also entitled to benefits under ATG. But the FM wants and she desires that all taxpayers move to the new regime. The only way she can do is to add incentives to the new regime and disincentivize the old regime. Therefore, she is not expanding the base of deduction under ATC. She is giving you an option in theory, but in practical terms, she wants all the taxpayers to move to the new regime. That's the way she is making it. The whole amendments are with an objective of compelling people to move to the new regime.
All right. Now, you were also mentioning about the new pension scheme as well. If you could just explain to our viewers how to make sense of that as well.
There are two amendments. One is a non-tax amendment. She did make an amendment that the Vatsalya scheme, where the parents can contribute to a pension scheme of or in the name of their minor child, and the minor child, when he becomes a major, can transit naturally to the new pension scheme. There should be therefore no tax incentive on moving to the new pension scheme. That's one part of doing that. That's one part of the issue of addressing the new pension scheme. The other way would be that there is an employer who is allowed a deduction when he contributes to the new pension scheme in relation to the salary of an employee. The maximum that he can contribute is 10% only. So if my salary is 10 lakhs, my employer can contribute 10% of my salary, which is 1 lakh, to the new pension scheme. That amount which the employer contributes to my pension scheme becomes income taxable as salary in my hands, but I get a corresponding deduction under 80 CCD of 1 lakh. So net to net, I will have no tax incentives or no increased tax because of that receipt of NPS contribution and my contribution to the NPS scheme. This limit was increased to 14% for employees of the state government and central government. Now, to bring in parity between those employees of the government and the employees in the non-governmental sector, we've had a change this year to say the employer, when he contributes 14%, will be able to claim the entirety of 14% as a deduction against his business income. And the employee, when he gets this 14%, it will be regarded as his income. And when he contributes, or technically the employer contributes to the pension fund, he will be getting a deduction under 80 CCD. But this 14% enhancement is only under the new regime of 115 BAC, that is the new regime we displayed on the screen. This reduction of increased amount from 10 to 14% will not be available to the people who are falling under the old regime.
Okay. So, Padam sir, also I was just noticing if there's any benefits for the home buyers here. Given that there's such a push towards the Pradhan Mantri Awas Yojana, is there anything of significance there as well, or is there something that Nirmala Sitharaman could have addressed here?
In terms of tax benefits, nothing in reality. In fact, it may work to the disadvantage of the people who are not home buyers, who are home sellers. Because the law would now say
Correct.
that you're going to be long-term capital gains if the property is held by you for more than 2 years, absolutely fine. But they will not give you the benefit of indexation. That is, when you purchase a property and thereafter there is a fall in the value of money, and therefore they compensating you for the fall in the value of money by allowing you to increase the cost of acquisition by a table that the government notifies, which is popularly termed as indexation benefit. The FM is saying, I will not henceforth give you any indexation benefit. And I will say that the long term capital gains payable by you would be 12.5% instead of the present 20% of long term capital gains in relation to a property sold by you. There could be many transactions, therefore, that people could have had technically a loss. Property is old, they don't appreciate in value that much. Therefore, the sale price is pretty low today. In those situations concerned, the individual concerned will not be having the benefit of indexation. He may therefore technically be liable to pay tax on the book gain that is making a 12.5% concern. So that may be a disadvantage to a many taxpayer concerned. But if you think otherwise, your property is new, it is appreciated very well. You would have otherwise paid tax at 20% earlier. You're going to pay tax at 12.5% today.
Okay, 12 and a
So
half
it
percent.
depends, therefore,
All right.
situation.
Now also,
Not something that can be very
go ahead, go
generalized
ahead.
very easily. Can't be generalized very easily. It depends on each fact situation concerned to say whether the new regime is going to be beneficial to him or could be damaging to him.
Hmm. All right. Now, Padam sir, coming to the startup industry as well, there's a step that was long overdue, the angel tax that needed to be abolished. It has been done. How significant is this that the government has taken such a move here?
This is a very interesting question. On an optical level, removal of angel tax is a very great thing to be done. To say that angel tax, a person invests in a startup and it is the perception of the individual concerned as to how he values the startup. And he may therefore be willing to contribute and subscribe to the shares at a very high price. And that, in the opinion of the government, was not necessarily a reflection of the true state of affairs. And the government therefore said, I'm going to have a particular mechanism of valuation. And if your valuation is more than that mechanism of valuation, then the company would have received something called as unjustified premium. The subscriber or the investor has invested in the company at something called as unjustified premium. To the extent of the unjustified premium, there was a levy of tax on the company itself, which was called as the angel tax popularly. They have now removed that to say, no, we are not going to have any longer the angel tax being introduced or imposed. What's important for us to note is that there is also another parallel section that is already there existing in the statute concern, that if the person who's investing doesn't have capacity to invest, his identity is doubtful, then you're liable to pay tax on the income that is invested in the company, on the capital itself invested in the company at the rate of 60% tax that is already there under section 68 of the Income Tax Act. That continues to remain on the statute book. So one section is removed, angel tax is removed. Optically, in my opinion, that was long overdue. It ought to have been removed earlier itself. Anyway, later, but then it has gone away. Is a good thing for us to happen.
All right, a good thing to happen. Finally,
A good,
Padam Khincha sir, I would just want to ask you if you were to rate the budget on a scale of 1 to 10, what would be, and your reasons and your criticisms and the biggest highlight of the budget, the way you see it?
in my opinion, we need to look at what she proposed at the start of the direct tax proposals. She says, I'm going to have a new income tax act itself coming into the picture. So now it depends upon what would be the shape of the new income tax act, and therefore this is going to be some sort of a measure that is going to be temporary in nature. Technically, all the proposals made are going to be temporary in nature because she is saying in 6 months' time, I think I'll have a new direct tax code coming in. there were exercises done by the finance minister earlier, Chidambaram had, and he had two codes being introduced, but they never saw the light of the day. Therefore, getting into one more exercise of having a income tax code, which the FM believes will be easy, will be simple, will be concise. In my opinion, that's going to be very easier said than done. Traditionally, having seen the way in which the things have to be addressed under the Income Tax Act, tax laws cannot be easy. They cannot be simple. It's going to be very difficult, therefore, for us to say that I will have a small, concise, easy income tax act. That's a statement of intent, may not necessarily come out in reality. This is one. Second, there are certain good amendments to be made this year, especially in terms of equalization levy going. This is a very interesting amendment to say equalization levy was a levy which the government of India was saying we will have what is called as the Pillar 2 tax coming in under the base erosion profit sharing. India has removed the equalization levy because they've made a commitment to US that up to June 2024, equalization levy will continue. Thereafter, they are going to discontinue this, possibly as a commitment to the US authorities concerned. They have therefore said we are not going to have this equalization levy. This is the development that is happening under international relationship that's going about. They're also saying that we will have one more Vivad se Vishwas scheme coming about. That means the government is worried litigation is happening. That's a very interesting statement by the government. They had a Vivad se Vishwas scheme in 2020, and they're going to have one more scheme now. That means there is so much a pile up of litigation already that the government is contemplating one more scheme to settle disputes concerned. And this is for us to be looked into. Why are the disputes emerging at all? The disputes are emerging largely, and why are people opting for them? They're emerging largely because the tax assessments are not coming out in the manner the law was supposed to be implemented. And therefore, they're leading to increased disputes. And government's trying to say, hey, there are increased disputes, settle them by paying some amount of tax, don't pay interest, don't pay penalty. And the government is trying to say, I will have some element of backdoor taxes through this mechanism of telling people, hey, I will settle your disputes. You don't have to wait for high courts to decide about 15, 20 years now. Pay tax right up front today itself and settle the disputes concerned. So that's an interesting aspect to go about. There are certain changes to the charitable trust, which is, I thought, it was long overdue. Charitable trusts have done tremendous work, especially during COVID times. What government couldn't have done, the charitable trust and NGOs did across the country. I thought they deserved, therefore, some element of a sympathetic treatment. The amendments to the law in the last 2 years were very harsh on them. So they are now trying to simplify the regime concerned. And let us hope, therefore, the true spirit of encouraging NGOs and making charitable trust life easier would happen under the new regime concern. Capital gains tax is very interesting. She made a statement, I'm going to simplify it. It's not been that simplified because the law, again, she has made a statement that long-term capital gains itself, which is taxable at 20%, some long-term capital gain will get taxed at 30% today. Will be getting taxed at normal rates of tax today. No indexation benefit, normal rate of tax at 30%. Therefore, the amendments made are not very simple the way finance minister is projecting them to be. What's important for us is also to understand that in relation to buyback of shares, they were having a particular mechanism of calculation on when a company buys back shares, the tax was liable in the hands of the company. That did not work in favor of certain overseas investors. It also did not work in favor of investors who had acquired shares from another shareholder concerned. So therefore, now they said we will remove the buyback scheme and we will make the shareholder pay tax either as dividend depending upon the position of reserves and surplus in the company or as capital gains in excess of the amount referable to the reserves and surplus. And therefore, that will be a case where certain changes have happened, in my opinion, worthwhile. There are a lot of other changes that have happened. I don't think that will be benefiting all the general listeners, and therefore I will not go into the aspect concern. TDS rates have been changed.
Yeah, Padam, one thing just before we move on to TDS, you mentioned about capital gains tax. They have been receiving a lot of questions that uh, when you hold a financial asset, now what qualifies as short term, what qualifies as long term? That is one question that is being asked. And what is the kind of tax rate on profits? If we could just break down a little bit on, for
So we now
the
need to, yeah. So the law is very interesting to say now. Classification of a long-term asset depended upon the period of holding. Some assets qualified as long-term capital asset if you held for 12 months. Some assets qualified for long-term capital asset if you held them for 24 months. And the remaining assets qualified as long-term capital asset if you're holding them for 36 months. I'll give an example of each of this. Listed securities, let us say I'm holding shares of Infosys or Reliance or Wipro. 12 months holding was sufficient to make it long-term. If I had an immovable property being land or building, it was long-term if I had held for 24 months. If I had held, let us say, gold jewelry, I need to have the gold jewelry held by me for 36 months to call it as a long-term capital asset. These are three existing classifications. And the tax rate was 20% maximum on long-term capital gains. Short-term capital gains, you had a tax of about 15% if they were listed securities, or you had liable to pay tax at the normal slab rates. So what they have done now? I'll come to the short-term capital gains. That's an easier way to answer. Short-term capital gains on listed securities. We were liable to pay tax at 15% originally. The FMS said they shall be now taxed at 20%. They have increased the rate of tax. 20%. This is one part. This is easier to understand. Now look into those securities that come into the 12 months holding period. All listed securities, all business trust units, therefore the REITs and others, and certain of the equity-oriented mutual funds units will be long-term capital asset if they are held by you for more than 12 months. Earlier, the tax, if you had paid securities transaction tax, you're liable to pay tax only at 10% on this long-term capital gains. Now you're going to pay tax at 12.5%. Therefore, in relation to listed securities, you will have an increase in rate of tax. The mechanism of computation doesn't undergo a change. Therefore, you're going to pay higher tax on listed securities. Therefore, there's already a worry and cry in the market concern that you're asking us to pay a higher tax than what is happening. I'm liable to pay security transaction tax. I'm also liable to pay the capital gains tax at an increased percentage, not a significant increase, but up to 12.5 from 10%. There's already a clamor other way around to say that, look here, the banks were crying that their bank deposits are suffering tax at the normal rates. When I earn interest from a bank FD, I pay tax at the normal rates. Therefore, the banks were asking for, there is already, because of the differential in rates of tax, monies are moving to mutual funds and shares. They're not coming into deposits. So either give us a concession rate of tax for the clamor for the bank's concern. Now, to draw some level of parity, instead of reducing the rate of tax on interest income, the FMS said, I will increase the rate of tax on the capital gains income from 10% to 12.5%. This is what she is doing there. This is one part of the story as far as listed securities and units of the business trusts are concerned. Now, all other assets, you are going to have a holding of 24 months only for being regarded as long-term capital gains. Or gold jewelry, which was earlier 36 months, they'll be long-term if you're holding it for 12 months. Property anyway was 12 months only. They're also therefore going to have a long-term capital gains on property income if you're holding it for more than 24 months. Interestingly, on all these long-term capital assets, you are allowed to index your cost of acquisition. That benefit of indexation is now removed by the finance ministry. You can't index your cost of acquisition. So your sale price minus the actual cost, the differential will be capital gains. And earlier you were liable to pay tax at 20%. You will be now liable to pay tax at 12.5%. So this is interesting. The rate of tax has come down, but the mechanism of computation has undergone a change. So you pay 12.5 a lower tax, but without the benefit of indexation. Under the earlier regime, you had the benefit of indexation, but you paid a higher rate of tax at 20%. So I made a statement that therefore it depends upon individual situations concerned whether you will be benefited by the new scheme or going to be hit by the new scheme. One. I made a statement that if you are holding an asset for 24 months, this will be long term, and you're liable to pay tax at 12.5% only. But they have picked up certain assets concerned, unlisted securities and others, which say they come under a new section called as 50AA, where they say if you're now going to fall under that new section concern, although it's a long-term capital gain, you're liable to pay tax at normal rates of 30 on the slab rate itself. You'll not be able to get the benefit of concessional rate. And therefore, in these type of assets concerned, you are liable to pay higher tax than was earlier, although you call yourself to be saying, hey, I am holding a long-term capital asset. Therefore, there's going to be some disadvantage in holding these type of assets itself. So there is, that's why I made a statement, not just a very easy statement.
All right. Hmm.
Not an easy statement to say. He said, I'm very simplified the capital gains. No, not that easy, concern. Not that easy.
Not simple at all.
Not
All
simple
right.
at all. Actually,
Any final thoughts, Padam Khincha sir? You were
incidentally,
also speaking about TDS.
Incidentally, I'll also make a statement that you're
Yeah.
entitled to an exemption of 1 lakh for long-term capital gains on listed securities. That has been increased to 1,25,000 rupees. That's the way she's gone about. TDS rates, what she has done now is, there are some sections where liable to do TDS at 5%. She has consistently reduced that TDS rates on the various sections concerned. Now, many of the sections where she has reduced the TDS rates don't concern us in a regular practice. The only thing that's therefore concerning us would be on brokerage and commission. When I was receiving the brokerage and commission, the company paying me commission or brokerage was liable to withhold tax at 5%. They'll now do a 2%. So there are many other sections concerned where the TDS rates have come down to 2%. And in e-commerce transactions also, where there is a e-commerce operator who's making a payment to an e-commerce participant, he was earlier doing TDS at 1%, that will come down to 0.1%. That's the only change. That may also not concern most of us. Most of us are only concerned with the withholding tax on brokerage and commission, which comes down to 2% from the erstwhile 5%. Salary withholding.
So thank you so much, Mr. Padam Khincha. Yeah, go ahead.
No, salary withholding, no change in the withholding rates of tax. Small technical changes are there, may not concern majority of us today. And small changes in partnership firm, they've said that if you're having a working partner, you'll have a change, increased salary deduction. Earlier, the law was saying 3 lakhs up to 3 lakhs of book profits, you will have particular rate of taxation. They have increased that limit to 6 lakhs. So 90% of the profit up to 6 lakhs will be available as a deduction on a very generic way. And the balance profit will qualify for 60% of salary as a deduction. Again, for some partnership firms, therefore, only we need to convey is that you'll be able to claim a little more salary as a deduction while computing the firm's income. Again, a very technical question. Some partnership firms will have a benefit, not a very great benefit, some marginal benefit.
Thank you so much, Mr. Padam Khincha sir, for joining us on India Today SoSouth and simplifying various aspects of the budget and especially the taxation part of it. We look forward to having you again on the show. Thank you so much.
Thanks. Pleasure talking to all of you. Thanks.